TGIF, huh? Waterloo. So we're going to have a webinar next week on Wednesday. I think it's Wednesday. Pretty sure it's Wednesday. And it's going to be a webinar from Tip Ranks. They're going to come in and give us a breakdown um, of their tool. And I think we're going to get a new affiliate link, which will give you a chance to get it on sale. So if you see me looking at it or using it, um, I don't want to tell you don't get it, but if we're going to get, a way for you to get it on a discount, then why not wait for the discount? I did post our old review though. I think we're going to get a new review after this. That way it has our webinar video tucked into it and anything new that they might kind of fill out for us. But if you haven't used it before, I'm going to let them really lay out the most awesome tools. But whatever first brought me to using tip ranks was the idea that I don't like the idea of unknown analysts. You hear all the time, hey, Caterpillar got an upgrade. Oh, okay, who upgraded it? Why did they upgrade it? And now what's the new rating? And the ratings can be weird. They're not just buy, hold, that kind of stuff. I've seen some really strange ratings that really didn't make any sense. Um, or they'll downgrade it and they'll give a higher stock price. And they're like, what is that all about? Why did you give it a downgrade, but you also raised your price target? So when it comes to analyst recommendations, I've never really been happy with what I found out there until I came across tip ranks. And I'm not going to spend a lot of time on it because I know they're coming in here next week. But for me, it's about accountability, and it's why I like them, because the analysts here are held to account for the call outs that they make. And if they have a history of, doing poorly, let's try to be nice with it, I guess. If they suck at it, then you'll know because they'll have a very poor rank. And if they're really good at it, well, then they'll have a really high rank. So I just wanted to throw that out there to post the review, kind of remind people that this is just one, but we have all kinds of reviews when it comes to the different tools that are out there. So that if you are looking around and you're thinking about maybe getting a tool, check out our review, see if it's any good. I don't give BS reviews. If I don't like a product, then I just flat out say I don't like it. I'll be fair and I'll be honest and say, what I don't like, but I'm not going to just give some company a thumbs up or a good review just because, right? And I don't think I'm the only one here that would say that. I think all the moderators are pretty fair with our reviews. Yesterday we were talking about Earnings Whisperer, and that's another really great company that has a time and a place, right? If you want to trade earnings, then the data that you can get from Earnings Whisperer would give you way more edge than the person who doesn't have it. So there's a lot of tools out there. Um, this is just one. There's a lot of new AI tools, which I find really interesting. I haven't really dug into them too much, but the ones that I have seen, I really like. The Goldilocks would be finding an AI that analyzes the options chain, not advanced options. I don't want that. Looks at the same options chain that you and I look at, right? Like Thinkorswim or Tasty Trades, and looks at the same data that a normal trader has, analyzes those options and the options chain, and then gives recommendations on that, like outside flow, you know, um, UVol, some kind of relative volume on options. You know what I mean? Just like that kind of stuff would be fantastic. That'd be really useful. Or, how options, when they get attacked, everybody's hitting the bid or everybody's hitting the ask on that one single strike, and that one option will really start to expand in value. If they had some kind of AI hitting, analyzing the options and catching that kind of thing when it has outsized delta, or the bid and the ask has increased really fast over a small period of time. They could do so much with AI and just regular plain old options data that they don't do. It's just really frustrating. But whatever. Someday, right? Someday. There was a very complex company that had reached out and asked if I would use their product for a little bit and try it out. It was an app that you had to download into your computer. It was a big product, but it was so complicated. Like, forget it, man. It's not worth it. You would have had to have gone to school just to figure out how to work the darn thing. So, what are we going to work on today? I want to review the trend list, see where we're going to go from here. But the ES just keeps getting these grinds higher and higher and higher. And it just gave a 1, 2, 3 fail, and then it broke out here. It gave a 1, 2, 3 fail back over here, and it broke out here. There's a 1, 2, 3, and instead of falling, it broke out. Did the same thing here, and it broke out. So I don't know. My target is still, if we can get through the call wall, we can get to 5,000 today. 5,000. I know. It's easy to say it now, but I was saying it all the way back here. When we were at 49.27, I was saying it. So, oh, come on. Just let me say I told you so. I don't get to do it very often. Did you see my call on Facebook yesterday? I bought puts. Huh? What? I told you so. Just to be fair, if I got this one right, I totally got that one wrong. Buying puts for Facebook earnings. How's that for how's that for accuracy? Huh? So the trend list. Okay, I'm done taking abuse from Facebook. It's not a really big list. It's just it's a boring list. That's doesn't get a lot of love. I don't think ARLP is on that list anymore. I keep it more updated on TradingView than I do on Thinkorswim. So maybe we'll go over there. Let's see. Hold up. No, it's not on the list anymore. All right. So ATI is on that list. And on the monthly, it's not looking that bad. The weekly either. It's been slowly walking the levels up on ATI. So it's a little nasty right now in this pretty deep pullback, and I'm not happy that we didn't get that higher high. But, with earnings, we did have a pretty sharp pullback to the level. So, yeah, little concerned with this one. My entry is low enough that I'm still good, but we're getting into that protect level, so probably going to have to start doing some options on it. We got Wholesale Club Holdings here. If I remember right, this is like the Canadian version of Costco or something. I believe I heard it called that. It might be a different company, but it comes to mind. And this is another one where, if you zoom out a bit, it had been doing really good, and then it's just these lower highs. But we are wedging. It's starting to form up a little bit. I think it's going to get another leg up, but the digestion period has been pretty big, and we got to get out of this red candle. Still above the protect level, though. Some energy names here like Peabody. And that earnings coming up right after Valentine's Day. Check that consolidation though, right? We're on a daily here. It's all inside this one bar from the 24th. a lot of buying in the last 2 days, picked it back up off of these lows. It was a little concerning the other day when it gapped down like that and opened up, but I mean, it ran right back up again. We're just really struggling at $27. But the next level, that might turn out really nice. Canadian Health, yeah, Cardinal Health. So when I put these out there on the higher time frames, look at that cup. I mean, that's beautiful. It's just these lower time frames that look a little nasty. Or CCJ, that's the more the uranium play. That consolidation was just a nightmare to hold through. But after holding through it, all that, baby, all that. So these are still good names, you know, until they trigger the close below. These are all looking to do good into the future. You know, it's the space that they're in, it's their their earnings, their money management, the widget that they run. You know, who's in control of the company, and they all have a reason for being on this list besides just the idea that, you know, it's got a good stock chart. Like, I mean, Exxon, this is not the picture of a great stock chart at the moment. But uranium has been a fantastic trade. Just a little bit of that dip in the last year. And of course, with Buffett in Japan, had to have that Japan play. Toyota Motors. This one's thin. Thin. Specialty retail's been fantastic, like Dick's Sporting Goods, TJ Maxx. I'm really focused on Walmart. If you haven't seen, and this is an old video, but a lot of the things that I brought up in that video are still relevant when it comes to Walmart. So I did a video a few years ago on how to do a deep dive. And it was this video here, how to perform a deep dive on a company. And in this video, I showed how to do one, and I did it on Walmart. So these three combined are a really good video on how to do it. And I mean, look at just the screen on this. Kind of gives an idea of my approach. I go out and I get all the data. Sometime today. There it is. This is Thinkorswim, right? Get your Thinkorswim to look like that. I go get the data, and then I lay it out, putting it all on the chart. Kind of get an idea of what I think this company can do based on, you know, ratings, its earnings, its widget, its supply chain issues, the other companies that it deals with, its competitors, and I put it all together, and I've got access to some pretty good tools. You know, Investors Business Daily and places like that. So I go out and I hunt for the most relevant information, break it down, lay it out, and then I make an informed decision about what I want to do with it. So that video is still out there, and the one for Walmart, the main takeaway at the time was that their online revenue, the amount of money that Walmart makes from selling products online as a part of their total amount of money that they make as a company, is really, really low. And even 2 years ago, my opinion was if they could change that, they could do so much better, and that they're working on it, right? That's one of the things that they're working to do. And their international is, you know, doing better than Sam's. So if they could really clean that up. Now, some of the apps like Amazon are now getting built into social media. Peloton got a really nice bump out of that because now while you're on your Peloton, your exercise bike, you got these ads that pop up and you can click to buy right there from the Peloton app without actually leaving the app and going to Amazon and getting the product and then coming back. You can just buy it right there at the click of a button. And so that gave Peloton a little bit of a bump. It gave Amazon a much bigger bump. Walmart needs to get into an app, right? It just needs one. And I've been kind of toying with the idea, what if they get something out of that DWAC or one of the other social media apps that are out there trying to challenge Facebook and Twitter? But either way, if Walmart can really pick up more revenue out of even just that Sam's Club and from online, I think they would do a lot better. They've certainly got a lot of analyst upgrades. It's got some revisions, and look at this chart. So, I mean, we just went through some of the names on my own trend list, things that I'm in, and they don't have this sexy 45-degree angle to them. There's these digestion periods where you got to kind of hold through the rough before it runs up and breaks out. I think we're in a whole new leg up for not just Walmart, but for a lot of the market going forward. We just have to get through this risk period. I can't stress the risk enough right now to let's look at this for a moment. Today, we have the S&P up 1.25, the Nasdaq up 1.75, almost 2%. We got the dollar up 0.75%. U.S. dollar Japan is up. I don't even know how many percent. We'd have to use the measuring tool to even see it. Almost 1.25. And we've got the 10-year up 4.63%. 4% today, the 10-year. That's the S&P and the Nasdaq should be crashing and burning right now with the 10-year making a 4.5% move on the day. Right? And not only are we not crashing, the Nasdaq is up almost 2%. This is unheard of. This is why I'm saying, approach with a little bit of caution, because this isn't the way it's supposed to be. Something's wrong here. One of these is lying. The other day we analyzed the SPX when it came to QRA. And if we look at those QRA lines and we think about the effect of the last QRA that was like the one that we just got, it would be back here. And what happened? We had a little bit more of a bump up, and then we tanked. We fell, not crashing and burning, but we fell down into the March FOMC, and then they came out with the FOMC, and we rallied back up, basically right where we were for the last QRA into the next QRA. This is really what I think we're going to get this quarter, and we're just finishing off the week bullish, and then we're going to do that. Maybe I'm wrong. I mean, I've been wrong before, but something's wrong today. Seriously wrong today. With the 10-year moving like that to the upside so strongly. Now, that QRA that we were just talking about, this is what the 10-year did then. A little bit of a dip, and then a very strong rally. And it's what I think we have going on right now. The S&P went up, and the TNX went up. What do we have today? The S&P is up, and the TNX is up. So this is why we want to approach with a little bit of caution. So you look at a lot of the names on my trend list, they weren't responding the same way that everything else was. You know, it's why you want to diversify out of some of those growth names, perhaps, and look at a little bit of value names. So far, I mean, we're right on cue. Let's zoom into this. We had the QRA, we had a big pop up, and then we ended the week and we got into a new week and down we went. So we had FOMC and QRA, and we had the big pop up, and we're getting into the end of the week. $49.87. We're so close to my 5,000 mark. Yeah, but see, we're getting this breakout in price. We're not getting that breakout in CD. Cumulative volume is not following it up. So we've got divergence here. Be careful on that breakout. And the thing is, there's so much push. We could probably still go up and hit that 5,000 mark, but it's going to be just like all day today, choppy, violent, lying to us, and then breaking out against everything and continuing to go up. This is why somebody asked the other day, why would I trade options if I can trade futures? Because on a day like this, you could get that call option and just let it ride. Like whatever you paid, once it's paid off, it's done. You got no risk. You just let it ride. Lock in your gains and leave it alone. With futures, you got to stay vigilant. You're in and out. You know, you're looking for another play, and it keeps lying to you on price and then breaking out and breaking through anyways. There's a time and a place for both, right? I mean, the flows are a little heavy, but that divergence just really stands out. Any of you trade with the cumulative volume and cumulative delta? Big move in growth today. This is growth versus value. Big move. Breaking out into new highs. MACD is pointed back up again. And yet, a ton of risk. this risk indicator is coming up, and the higher it goes, the more risk we have, the harder it is for the S&P to rally or to be, going up. This thing is straight up because it's based on dollar and yields, and they're up. The 2-10-2 spread, and not much change yet, but this is one of those things that generally changes at the end of the day. Unless it's something drastic, then it'll change midday. The Mag 7, new breakout, new highs. And look at the 2-year and the dollar up with the S&P up. That's not the way it's supposed to be. I was in such a hurry today I didn't get my updated levels. I'm just going to do the top 5. These are the top 5. See, SPY is at that call resistance, 495. So we come over to SPY, we go to the 0-day, 495. They're not hitting it with volume. Of course, this late in the day. That's the push side. Hold on. Hey, there we go. 316,000, and then 495, 354, almost 355,000. They changed 132% today. Hoo-wee. At the open, we were at, call it 489, 490. What options made the most money today? The ones that were at the money. They're the ones that made, and just slightly out of the money. 489, 490, that's like right in here. 2 or 3 strikes out of the money, 2 strikes in the money. Those 6. So one thing you can do if you're day trading is you can map out the options that are getting the most flow, and you can look for them to start selling as kind of a tell if they're getting ready to dump it. We can see their accumulated buying, but if it's a 0-day, they're going to dump it. Heck, if they're just going to day trade it, they'll dump it, right? They'll go in and hammer one strike, one expiration, and then they'll start dumping it into the close. Today's volume on this strike, the 495, has had 65,000 trades. Let's just assume that a large amount of that was buying, although we know it wasn't, right? We can see the sell side, but we're going to be looking for some really big sells that matches those really big buys, some block orders that start coming in. That would give us kind of a heads up that they're trying to dump it. I'm showing you this way because, sure, I've got really fancy tools, but if you don't have those really fancy tools, what are you supposed to use? You know, like, that doesn't do you any good. So you do have some tools, though. You're not completely disarmed. Up here in the top, I've got the pin. You can get the net flow and the algo flow. Just copy it, put one in at a time. I don't want all 5 days. I just want today, like right now. And just use the word market. It's fine. That'll give you SPY, basically. Let me rephrase that. It'll show you SPY. But on the other one, the net flow, if you use market on this, it's going to be for total market, and it's still going to show you SPY. So it's a little misleading. If you want actually SPY net flow instead of market net flow, then you want to put in SPY there. The net flow for SPY is not the net flow for market. You see how they're different? And that's misleading. If you didn't know that, you would think you're looking at the options flow on SPY when you're really not. You're looking at accumulated options flow. So here, as you can see, things are really divergent. Now, why did they do that? The thing is, options flow on the indexes is often opposite of what you think. So if there's a lot of call trading, you'll probably think, oh, they're buying. But in the indexes, a lot of call trading usually leans onto the sell side. And they even have warnings all over their website that says, be careful if you're analyzing the indexes options, because their options are used for hedges way more than equity options are used for hedges. Okay. And so instead they show you market net flow and SPY's stock price. We started to diverge right here. The stock price went up and the net call premium went down. It's trying to come back around now, but we really split up there for a little bit. So you do have some ability to see what's going on in the options world, even if you don't quite have an options broker like Thinkorswim. And even as a futures trader, you're going to want to know this kind of data is happening out there. They're bringing it up like they're going to run it. All right, this is Apple. The lower left hand, excuse me, the lower right hand chart that we have here, this is the quarterly chart. It's railroading right now, just maintaining in this zone. I know it seems bearish, but it's not. And they just had a profitable earnings, even though they tanked. They mostly tanked because they're not cleaning anything up in China yet. And in fact, they're still trying to get out of China more to move their production over to India. So they're down a little bit. But this hollow red candle, this is a daily chart here. That hollow red candle shows that they opened gapped down at 180, and they've already rallied all the way back up to 186.5. So we're really close to yesterday's close, which is where we ended after that drop from the earnings and then the rally back up again. So 2 days in a row where we've had heavy buying carry it back up again after dropping down in the pre-market. I'm still long Apple in the bigger picture, but this weakness, I mean, you got to address it. It's the elephant in the room. If I was a long-term investor looking to get into it and I don't have any of it yet, I'd want to get through this buy zone. Right? It'd have to get through that and get above it and show me that it's going to be able to do that. Otherwise, it's still just a threat. So we've kind of talked about, defense before, how we can buy the stock and then defend it by using options if we need to. What that gives us a chance to do in the larger portfolios is buy something like this before it breaks out. Because, I mean, sure, we'll be more confident on a trade if it's above that 198. But if it's a buy and hold investment, why would I want to wait for it to get all the way up there? Just because it's going to be a stronger level and it may not fall from there? We've got some pretty strong levels already. I'd say as long as it maintains above this 165 down here, we're probably pretty good. There's a way of getting into these things. So say we want 1,000 shares of Apple. Yeah, we're talking big accounts. We want 1,000 shares and we start buying in at 200 shares at a time. That's 5 purchases. If we spread them out over 2 weeks, every 2 days or every 3 days we buy, then in a 2-week period we've got all of our options. Or all of our shares. That's fast, but it's doable. You could spread it out, do 1 purchase a month. I've seen traders that buy in on fall days. So like today, when it fell really deep, they'd have been buying on that day. If it fell more than 3%, they would buy. So you can go that route. But you want to allocate in until you've got your full value. But another way to get your shares, rather than just buying all your shares at once, would be to sell those puts first. So if we look at this and we say, okay, selling a 180 put when we were at 180 today, that would have been fantastic because we could have got some really good money for that put. Selling it now, I'm not so happy with it, but we could do that because remember, selling the put is our way to get stock. So if we sell the 185, if Apple closes below 185, we get the stock at 185. If it closes above 185, we get the premium, but we don't get the stock. And we can just try again. And we can keep collecting more and more premium while we're waiting to get those shares. Exactly right. Get paid to wait. So I mentioned CCJ a little while ago. Here's some of my CCJ. Now, The only thing about this is, to me, it takes a little bit of work because I haven't got one of those fancy online journals that you can download your trade history and then upload it into the journal and it gives you all your stats. But I kind of like doing it by hand. So here, back on November, I was selling some puts. I sold them for 69 and I closed them on the 13th. So I only had them a few days. And I mean, they dropped so fast. It was beautiful. I was doing this for a while and I was kind of keeping track, 65 here, 67, 63, 83. Things were going good. I was aggressive because I really wanted these shares. I wanted 500 shares. And I finally got assigned at 45.50 a share. But what my real cost per share was at that point after getting all that credit was actually 41.56 a share. I was already ahead of the game. I did it again, and then I sold a call. I thought I was I thought I was good on that call. Man, it ran me over. So one day I had stock, and the next day I didn't have stock because I let him take it. Like, whatever, I'll just take the credit. This one trade, and it was just from November to January. My combined profit in that, just that front one, was 722. And you're not going to buy a new car with that trade. But it kept me engaged. My risk was never more than I was willing to take. And in fact, I didn't even reach my goals. I wanted 500 shares. And now was working on another one, got assigned in that one. I've been busy. I haven't done a call side on that yet. So I've got one of my 100 shares. I still need 400 more. And where's my risk? I mean, this is me working to get what I already want, shares of this stock. If I'm waiting, I'm going to get it cheaper. So it's a nice approach, to be able to sit back, not have to worry about my stops getting jumped in pre-market trading or getting wicked out and having it run away without me. I'm in control of this trade. And I don't know, what's the worst fear I guess I have of this is that it just runs and runs and I don't have enough shares. I guess that's my biggest fear. Because as a company, I'm pretty comfortable with this company. I guess the next fear, other than having it run away without me, would be something like EDU. I remember when EDU had a hit piece come out on it, and it fell from grace. I mean, it went from $200 down to $10 eventually. But when the hit came, it came fast, and we went from like 200 to like 120, fast, fast, fast. So I guess one of my fears would be that a stock that I'm heavily vested in, that I've got these options in, I've got stock in, and then it just seriously falls apart as a company. EDU's really turned things around, and it's something that I've been really focused on. That's why when I approach a project like this, I really want to know what I'm trading. It can't just be Joe Schmo, Bobby's lawnmower service. I want to know what company this is and that it has some sustainability to it. Probably want to see what Kramer has to say about it, just to make sure I don't agree with him. But when it comes to trading, it's a really good approach. It's way more efficient for people that have a full-time job, can't watch the market all the time. It's really efficient if you don't have the technical analysis skill set to be able to prioritize breakouts and things like that. Because you don't need the breakout, and you've got a lot of control over where your supposed stop is. I'm sure that they already are. Um, so this is something that has always been a curiosity for me. And it kind of fit into what I was saying earlier about AI being pointed at the same options chain that everybody has, like Thinkorswim, instead of Black Box Stocks, Cheddar Flow, and Whale Stream, all those fancy places. If we just pointed AI at this and had it tell us things like, "Hey, when was this 482 sold to open? How long has it been around?" Now I can get that answer, but I have to go get the answer. Why can't I just get it right here? When was the date of inception for this? I shouldn't have to go hunt for it. It should just be right there. That was sold to open 2 days ago. Cool. So if we look at the one for Monday, and like you just pointed out, all these $5 wide strikes up here, are any of them getting opened today? Where's the individual single strikes? I bet they are being opened today, and we'll see them Monday. So if you want to know the 0 days that we have, how many of them have only been open a day? Like they were opened yesterday and were there for us to trade this morning. One of the ways that we can do that is by um, charting it out, right? Putting it out on a daily or even a smaller intraday time frame. I have today's open interest, meaning what we opened today with, and then I had how much open interest there was the day before that. So let's use this 488. We look at the open interest on the 488. It's this 15,860. That's what this says, 15,860. But how did we get there? Well, yesterday there was 3,209 contracts traded that were held into the close. And so we went from 13.6 to 15.8 for open interest yesterday. And so we opened this morning with an open interest of 15.8. And of course, we've had 11,000 traded today. So a lot of times I can spot a new option because it'll have, like 0, and it'll just be one number on the other side. Or they'll be matching numbers. It'll say 68 and it'll say 68 on the other side. Like, this is what we had and this is what you get today. Oh, a new contract. It's not perfect, but it saves me from charting it, just going to look at the options, which is a big pain in the bum. Why can't they have that data? It sure would make sense to me. Yeah, like this 525, that looks really new. Maybe it had 10 contracts for a couple of days, but probably not, right? Probably not. It was probably opened with 10, and then the next day it got traded, and everybody traded it that next day. They were talking about Mark Zuckerberg and his 250 million shares of Facebook. I'm exaggerating. I don't know exactly how many he has, but the number 250 was used. So it's like 250,000 or 250 million. I don't know how many shares he has. But Facebook pays his dividend now, and he has all those shares. So now he gets a really nice paycheck just from those dividends. Must be nice, right? Which expiration you talking about for that 515? Mondays? Yep. We I don't know why it's showing 125 here and it shows 115 here with only 10 traded. Because look at my numbers, they match. All the others match. This 5462, it's the same as this 5462. 3847, same as this, 3847. But the one that you pointed out, 115, 125. That's odd. And I don't even know what to do with that. All my other numbers are right except that one. It could be because of the no volume today that my numbers aren't changing, which is just weird. It just doesn't make sense because the other numbers are right. I don't know, man. I don't know what to do with it. Yeah, it's crazy. Sometimes these things don't do what they're supposed to, and then it makes me not trust any of it. Like, no trust. Jack Nicholas kind of no trust, you know? Sometimes. Yeah, man. I think I'm going to be making a recording of my morning briefing to be able to say, look what I did. I do love those told you so videos. Heck yeah. The the opportunity just doesn't come around enough. So on FOMC, let's recreate this because I think you guys will get a lot out of it. On the FOMC day before the report, I got ready for the report. And one of the things that I did was lay out my chart on the levels. Not just the regular, like open, high, low, close, because you always want those. But from where I found price right this minute in time, what I was going to do if it went up from here, if it went down from here, and levels to trade it from that. And don't get me wrong, the legacy pivot points, they have value. I mean, always. But you need the skill set to adapt to the current market environment and give yourself levels from wherever you find yourself right this minute, and to be able to analyze or even ask the question of what should I analyze to have levels right this minute. There's a question about volume profiles in the questions tab. I don't know if that person is on the live stream or not, but I think there's videos on our YouTube that cover his question. It's not yet. I don't have permission to share it yet. As soon as I do, and I've asked, I'm just waiting for permission. Once I get permission, I will be sharing that indicator. It's actually a watch list column or an options column, I guess. Those columns are from your watch list column, though. And so as soon as I get it, I will share it with you guys. It is it's pretty cool. It does open interest from yesterday and how much it changed. Current open interest by percent, that change that we were just talking about. How much was it in a percentage basis? Volume versus previous volume. Volume, these two numbers in percent form, and then net volume. And I really like that layout. And of course, I got my notes on those. That way. So OI change versus OI today. I mean, that one's kind of self-evident. But the second one, OI percent change, is actually looking at those two numbers. It was hard to tell that at first because I was like, what the heck is this thing looking at? And it's just looking at how much this changed that. And we can see it was like 3.2% change. Oh, okay. Like that makes sense. The third one is yesterday's volume versus volume today. And we look at it on a 1 minute time frame, which is really weird. Because I was thinking I don't want candle to candle, minute by minute volume. I want to know how much options volume today is different from the options volume from yesterday. That's what I would want to know. And it really is telling us that. It really is. Yesterday's volume from today's volume, but it's looking at it on a minute by minute basis. How much is it changed? And then volume percent change, that goes back to that one. And then net volume on a 1 minute time frame using extended hours trading. Yep. So pretty cool. I like I like them. Once I get permission, I will share them all out and probably do a video on them. I just don't want to get in trouble. Not going to have some dude try to sue me for sharing his stuff. Yep. I was going to make them to where we can use them on the chart too, so that we can see, like I had that option charted out here. And if you chart an option, say like these, I got that call right here still. If you chart that option, why would you not want those out here, so you could see that data? I haven't done it yet. I don't want to do too much work with it if I can't share it. I'm pretty sure they're going to let me do it, though. They've been pretty cool with everything else. So, laying out levels. I got distracted. I saw something shiny. Ooh, squirrel. Got to crawl through all the stuff that I post. And we kind of touched on this when I streamed yesterday. I brought up this chart and showed it. But I'm going to show how I did it. Because, I mean, sure, if one of the moderators are around and you ask, we will lay out levels for you, as long as we understand what you need. But when you can do it yourself, it's even better, right? Because you're going to know what you need better than you can ever ask somebody else. So this was Wednesday's FOMC. Before the FOMC actually hit, I was getting ready to go. And I knew I needed high a day, and I needed the low a day, which was also the low of the week. So I made sure to include that so that when I looked at that line, I knew, hey, that's not just today's low, that's the week's low. We had a gap to fill, and then we had the high of the week. Not much beyond that, which was also a cog line, and I didn't write that, but it is. The one thing that I don't have on this is the open, and I'm really frustrated that I didn't get it in there at the time, but that open is really, really powerful. So you always want to know where that is. But I don't have it on there, missing it. Got my key level at 1850, or excuse me, 4850. We haven't been to 1850 in a while. And then they're not labeled because they're off the edge of the chart, but these two, those are gap fill levels. And one thing that I find when it comes with levels and traders, if you don't have the background behind what these levels are for or how we can use them, then they're just a line to you. And how do you trust a line? I don't trust a line. Well, where did it come from, and what's behind it? So when you're going to map out all these levels, if they don't have any context or meaning for you, that's some homework for you to do. Breaking out of yesterday's low. Okay, I mean that instinctively tells me that we're weaker than yesterday. Thanks, Captain Obvious. But what if it's last week's low? The market is really going to step back on that one and reconsider. Whoa, we're we're changing the entire structure of the market, getting below last week's low. What happened to that narrative? We're bullish and things are great, and hey, we're breaking down below this key level. So you want to have some context behind the lines and what you expect price to do, what you expect it to mean if we do get below that levels. If you get to low a day, are you supposed to buy at the low of the day or sell at the low of the day? Well, I mean, what's the game plan? Are we buying into weakness and selling into strength? Or are we selling into weakness and buying into strength? Remember Monday, Tuesday, and Wednesday before FOMC, we would sell into strength and we would buy into weakness. And for the most part, that worked out really good. Except for QRA Monday ran us over. But we knew it was coming, so, shouldn't have been short there. Tuesday, it was phenomenal. It worked excellent. And on Wednesday, once we started that range, we held it really good right up into FOMC. So when you're thinking about these pivot points, you have to already have that game plan. What am I supposed to do here? Buy it or sell it? And to be fair, you're not always going to have that answer. I don't always have that answer. So then there's the other thing. What if you don't know what you're supposed to do today? Then you sit back and let it get there, see if it breaks down or not, or if it holds and goes back up. Double bottoms are supposed to break down just enough to trap the bears and then come back up, so just letting it wick down there isn't enough. Even getting a candle close down there isn't enough. We need to know that it's firmly, truly, really breaking down, and then we can trade it. And that usually means that it breaks down and it gives us some kind of Busby. Not always, but usually get some kind of breakdown, a little bit of consolidation, and then a continuation. Another tip that it might not continue that move to the downside is if you truly do get that double bottom. Because a double bottom usually works really good for a move up. But for a continued move down, if it comes over and bounces perfectly on the line, you should prepare to go short. You shouldn't short it right there, but you should prepare to go short. Because that is a perfect, like a cup and handle kind of move. If it bounces perfectly on the line, then it's probably going to bounce perfectly on the line, give you the handle of that inverted cup, and then it's going to go down. So you don't have to guess. If you don't know if you should buy the low or sell the low, wait for price to tell you which one you're supposed to do, and then trade it. On this example here, if we broke this low, key level was target. We had to get through the 1, 2, 3, 6. We had to prove it. But there's plenty of room. It's 22, 25 points. I don't have to get in as soon as it breaks the line. Same thing for the other side, high a day. If we get through the high a day, where are we going? Close the gap. Why wouldn't we close the gap? We're through the high a day. Let's get it closed. Price will do that. And then, of course, if you get through that, you can overshoot to the high a week and each pivot point. So when you go to map out your chart, you want to know your levels, understand what you're marking, and try to apply it in a time frame that makes sense to you. You do want your big ones. But look, you don't want a chart with a bunch of lines all over the place. I was going to draw them, but that would take too much time. Let's just do it this way. I'll show you my morning briefing. You don't want it to look like that. Right? Look, come on. That's a little overwhelming. That's a bunch of stuff. And I don't even have monthly high and low, monthly close, or, there's still stuff missing here. Don't look at my chart. There's still data that's missing here because I don't show it in the morning briefing. And if we marked every open, high, low, close, and VWAP and gap spot, and there would be so much stuff that we wouldn't be able to even function. So when I'm getting ready for an event, or we have price, say, right where it's at right this minute, and I need some levels, I want to function with what I have right now. And will I miss stuff? Yeah, but that's why I do my morning briefing. I already have the notepad that tells me where the 10-week, the 10-day, the monthly close, and I can look at my notepad and see if we're near any of those levels. I don't need 90 lines on the chart. This is the last big candle closest to our current location. And I was in the car here, so I didn't see any news. I looked, but I was on the phone. So whatever that was, I don't know. But we're going to use that candle because that's where the event happened. Whatever it was. Now we've got structure, just like that. Got something to work with. I didn't know that it was going to look like this. I just needed to understand where we were at, what was going on with price. And now I have a much better understanding of what's going on with price. It is, yeah. Thank you. Because, yesterday I screwed the recording completely. But I was still so butthurt from screwing it up yesterday that I made sure I recorded it today. But it's always good to ask. So we got a key level, right? You will find it in streaming replays after it's uploaded. In that channel right there. But it's not being it's not being uploaded to YouTube. I'm going to have to finish the stream, convert it into a different format, and then upload it to YouTube. And it can take a couple hours, but once it's done, I will post it in that channel. So if I was looking for a trade, I now have much greater understanding of what price is doing. And I've got some levels that I can work with. Now we can tighten it up and bring things in always, right? We can always get closer. So we're going to hit this. And now we're going to go to the chart time frame that I like to trade on. And I'm ready for a trade. It's not always going to look as clean and good as that, but we got lucky. I must just be having a good luck day. We have railroad. There's some buying along the lows. Really strong structure across the top. When we break this zone, we've got targets on each side. I mean, we're good to go. Look at that, holding the 50% there. All we got to do is leave the range, and we have an opportunity. Depending on the size of the trade, I mean, if it's a micro, a couple micros, what I just did is more than enough. But what if you want 10 ES contracts? Don't laugh. Happens more than you think. This probably wouldn't be enough, right? I would want something a little stronger than that if I was going to take 10 contracts on the ES here. They say that's not supposed to matter, but I can tell you it matters to me. How big of a trade I'm going to take is directly connected to how comfortable I am with the analysis that I did and the direction of the trade. I'm still pretty sure we're going to that 5,000, so I would be comfortable with a breakout. But I was able to get tradable levels just that fast by focusing on this big bar, then focusing on the last big candle of this zone that we're in, well, that we were in before that breakout right there. This railroad, that's an IX10. And now the play. So we were able to just walk it down really quick. We didn't need to wait 30 minutes for, you know, something to happen, and we have a tradable opportunity unfolding. But you want your key levels, and I don't have any of them at this point. I stripped them all off for the example. These were my key levels earlier today before we broke out. So when I kind of rewind this a little, it'll make more sense. When we were down here, heck, that won't do you any good. Let's do it this way. This was the setup this morning. Halfback levels already marked. The risk zone, the gap close, 40, 47, 49.75 was the ADR half to the upside. It's the call wall, and behind that, the 5,000 mark. And it was long above breakout. That's all we had to do is just get through this halfback long above breakout after resting on ADR half on the bottom end. That's how I approached it. So targeting the risk zone, and we get the breakout. And the post that went with this a breakout above 49.38 offers a move into the risk zone marked on the chart, basically into 49.44. That's when this here, 49.44. But we are pulling back. Oh, and then 49.41. Watch that now for the first stopping point on the breakout, 49.41.75. Got the drop base rally unfinished business into the risk zone, which we weren't able to get through, and pulled right back to that support. So it was all just, it always is step by step, level by level. What do I think is going to happen when we get there? Should we pull back there? Is it done? How far has it pulled back? What's too far of a pullback? When's the next turn? And then what's the next target? So at this point, 98 is the next target, the K pin right up here. And that's, I mean, I'm going to grab a picture here because that's, I mean, that's what I wrote. Now that we're in the risk zone, 49.48.75 is the next area of concern. It's just level by level, right? Laying it out. Then we got the Busby. This was helpful. This always is helpful. Cumulative delta. We were at that 49.36, that pullback that we had got. And this was saying some divergence here. Nice, clean, as opposed to that trash. Then we had the Busby. So this is the breakout zone. When we break out like that, we'll often come back and test old resistance as new support. Look at all these buyers. That was beautiful. And we had, it was the halfback of this zone that I was looking for, which is also the cog line. Was looking to break it down through that to really come back and re-challenge that lower ADR. That is the ugliest Busby. I haven't seen something that ugly in a long time. So it tried to break out, still couldn't get through that risk zone. But this range was still holding, and we were still focused on that 49.33. All my levels that were still laying there were still there, right? Nothing had changed, so we still just didn't have anything else to go on. Except the bias was we were going up here, get that gap close. And until proven otherwise, that's the play. And then this came. So we started to get that push back up in the ES. Here's the 5-minute chart. It's usually more familiar to people than my tick chart. So we started to get that break up. Look at the cumulative delta. Really strong, almost all the way back up to the high of day. I was much more confident getting back in on a long there. Just a quick snapshot of what was going on with the 10-year up, the dollar up, the US dollar Japan breaking out, bonds down, and the NASDAQ ready to go. It had a beautiful breakout, but it hadn't broke yet. But the ES had. It had already had that liftoff back towards 44. And remember, that was the target. No, 48.75. That was the target because we had already got into the risk zone. It gets to 49, 48, 75 and gives us a new drop base rally, 3-bar, what do you get, swing high? Not even a complex swing high, just a very textbook, very pretty swing high. I mean, that you could put that in a pinup poster. He's pretty. And key level 49.50. It's an option level. That helps. I should have said that too. When you're studying, even if you're a futures trader, know your key levels for the options data. If you're trading the NASDAQ, see what those levels are every day because they'll pin a lot. The ES, it seems like it's always 49.50, 48.50, 4900. So for the NASDAQ, know what the levels are, even if you never trade those NASDAQ options. Because after a while, you'll notice they're always the same darn levels. It just keeps coming back up again and again and again. At the time, the post was 49.50 is an options level. It's important and it's difficult to get through, but it's the last thing standing in our way of that gap close. So we really needed to get through it. And then we finally get to the gap close. So when you go to lay out your levels, have a plan for what you're supposed to do when you get there. And depending on how soon you're starting your plan, have an idea already of what you're supposed to do on the day. Monday and Tuesday, the plan was sell into strength, buy into weakness, up until FOMC. So we had that plan even before the day started. And if you go and look at Tuesday's perfect example, that's what we were doing, right? We would sell when we got into the highs, we were buying when we got into the lows, and we didn't try to do breakouts. It worked perfect. And if you go back to my argument about a double top needs to go higher than the previous pivot point to trap a bull, they're bull traps. We had a beautiful high on the day. We got back into it just enough to trick all the bulls and then dump it on them. Same thing with the other side on the bottom. We had a really nice double bottom form here. It's the exact same trade on the other side, right? Double bottom. Go under there just enough to trick all the bears, make them think we're going to go down, and then we go back up instead. So when you get to one of your lines, whatever your line happens to be, it can't just be some generic textbook answer of, I'm going to buy when it breaks out of that line. Somebody asked me a really good question the other day. They said, you knew that this week up into Wednesday would be like this, and we didn't want to buy breakouts. But how would the normal trader know that if they hadn't traded enough to know that FOMC weeks are volatility suppressing and we shouldn't buy breakouts? I thought that was a really good question. So experience told me this week was probably going to be sideways into FOMC. It is not always true, by the way, but it's what we were expecting, and then it's what we got too, so it's nice. But if you don't know the answer, then you can just play the range, right? You can just play what you get on the assumption that until you know any better, let price tell you. These breakouts that I just highlighted that were double tops and double bottoms, they did exactly what a double top and a double bottom should do. They reversed, came back in, and went the other direction. So even if you didn't know that we were supposed to be, playing the range and not buying breakouts, you would have been able to do the other thing, which would be to play the double top and play the double bottom, and then play the double top again. Look at that. We're almost there. 9 ticks. Come on. 9 ticks more and we'll get it. I've got some of those levels on my chart right now. This is the SVE pivot. It's basically a floor pivot with all the R and the S levels. So R pivot is purple, the R's are red, and the S's are green. Earlier I turned on the midpoints, so let me just turn those off really quick because it has mids, but you don't want the mids. Just leave those off. And you can see where price hit them really nice and turned around. And this is confusing because when I was new, I thought that's what price was supposed to do. I turned them on and I was like, oh wow, look at that beautiful, beautiful bounce there. And here, oh my goodness, so perfect. What a beautiful bounce there. I thought that's what it was supposed to do. So when I started trading pivot points, that's what I was trying to do. I was trying to trade these reversals as if price would just come right up to it and hit it and fall away and it'd just be so beautiful and perfect. Yeah, no. Here's another one. That's not what they're supposed to do. It's not what price is supposed to do. So if you want to trade these, not just these pivots, but any pivot point, what'll really help you is go back to any random day with whatever pivot point you're trying to use. Yesterday's high, low, close, today's open, a floor pivot like this, and look at how price reacted when it got to that level. Really study what it was doing. And if you can, turn on the order flow and turn on the dome, because there's go back tools, right? They got replay on Tradeovate, so that you can kind of get the orders on there too. But think about what it means when the market gets to that level and how likely it's going to be that we can go even farther from there. How early in the day is it? How late in the day is it? And does it owe us any more than that? That didn't even make it to the halfway point. It's toast. And yet it's just going to try again, isn't it? Look at that. It's not done. All right, we got a little delta divergence. It wants to go. They want that 5,000 level today, gosh darling. They are going to go for it. It's like a kid with $1 at the store. They just got to spend it. They can't help themselves. You see how we're already getting that breakout in the delta? And this really high point here, the price is lower than this high, but delta is higher than that high. So that's some serious bullish divergence. Price came lower than this price and lower than this price, but our delta is way higher. Could it still fall? Yes. Don't think that this owes us and that it has to go there. It doesn't. Delta is not guaranteed any more than anything else is. But this is bullish. Even that pullback, we kind of needed it. So it's bullish. Oh, yeah, you know what? I always forget that darn auto liquidation, but dude, you're absolutely right. Watch the clock, baby. That you and I agree on. Watch the clock. It's the best indicator you can get, and it's free. Well, I mean, okay, price is the best, but it's the second best. So somebody asked the question about candles to analyze how I started with this big one. If you have a big candle to analyze, go to it. Like I chose that big one, but I didn't have to, right? So we can use CPI. So here's our CPI candle. Now I've got price, kind of close, but let's get right to where we are. Look at that. Look. Come on. Is it magic? It's Memorex. You can't make that stuff up, I promise. So you pick the biggest candle. Yeah, okay. But yeah, you pick the biggest candle, analyze that. And we got our levels, right? Just like that. So it didn't matter if I picked that 15-minute candle or if I picked the CPI candle. So if you liked that and you want something a little more consistent, you can analyze the first 5 minutes. That first 5-minute candle. I don't think I have enough room on my tool here, but we'll give it a shot. If I have to, I'll take some of the middle. Yeah, no, not even close. Still coming up a little short. All right, well, I skipped a little bit there. Let's get those. So even if you had only measured that 5-minute candle, it still gave you level by level all the way out. Now, it looks really extreme on a day like this where we ran to the moon. But it lines up the whole way. I like using that first 5-minute candle. It's a really good way to start the day. Let's just randomly pick one of these. That's a wider candle. That's a little more to measure. Start your day with it. There's a trading strategy that uses measurement of the first, well, of the open range, whatever your open range happens to be. That was some really good trading too with this reversal. There was a huge delta divergence on that reversal. It was beautiful. It was a great trade. So if you start the day marking out that first 5-minute candle and laying out your map for the day, even just from that, and you can do both directions. If you're not sure which way we're going to break out, just measure them both. And then, whichever way we break out, you've got your lines drawn. It's okay to say, I don't know which way we're going to go, so I'm just going to do them both. There's nothing wrong with that. Then, whichever way we go, you've already got your levels. What's it supposed to do at those levels? It's supposed to pause there. On this time frame, it doesn't really show up that much. I generally mark them on the 5 and then I go to my own chart time frame. I like trading on the 3500. If you're doing a smaller time frame, like say a 750, so we break down below 100 and we get to the 150, we pause, even though we did overshoot it. We pause there, get our new breakdown down to the next level, pull back, down to the next level. So it's just level by level. No, I don't. Um, we can write them out and then you can capture a screenshot of it, right? So the question is, do I have a list of all the pivots? I mean, all all is a big word, right? I don't have them all. I can't even. I don't even think I know them all because there's got to be some that nobody but you would know, right? But let's try some basic ones. The floor pivot and all of the ones that go with that. We'll just call them extra floor pivots. I think they're called extended pivots. Then there's your basic candle pivots. That's your open, high, low, close, your basic candle ones. For those, you want the daily, the weekly, the monthly, and the quarterly. To be fair, I don't keep those lines on my chart unless you've got something like Thinkorswim that you can change your, say like, let's go to history. When I go to history, I've got all these lines and levels, right? And they just stay there and I turn them off when I don't want it. Here's the history. CPI, non-farm payrolls, close levels of important days that I want to keep. On different brokers, you can turn off the drawing so that you don't lose your drawings, right? And so that they're not in your way all the time. If you wanted to do weekly lines and then quarterly lines and open, levels for monthly, daily, yearly. Sure, but it's a ton of work, and it only takes one mistake and you'll accidentally delete it all, and then you're like, oh shoot, I just lost 6 months of drawings. And so I'm not a big fan of marking them all out, right? I mean, yeah, you get a lot of work. My FOMC work. So instead, I know that this is old school, but if you have a pen and paper or a notepad and a pencil, write the lines down that are really important. Like I have my monthly levels at the top of the page, my weekly level. I can just look at the page and see the number, and then look at today and say, are we going to hit that number? And if we are, then I go out to my monthly and I take a look. So while we're talking about candle pivots from open, high, low, close, I don't necessarily recommend that you scatter the chart with lines from every single one of those. You'll just get buried. But what you can do is, it's the way that I like to do it. I start at the top. I go out there and I just ask the question, is there anything out here that I really need to know today? Not theoretically, but you know, we're about to open today. Is there anything I need to know? And if we were opening today and getting ready to cross through the close of last quarter, and we were right there today, I would want to know that, because I mean, we're about to hit it. Or the high of last quarter, I would want to know that because we're about to hit it. So I start at the top. I look at the quarterly. Is it a doji? Is there a trend line? Is there the 10 period or the 3 period moving average? Are we about to hit it? Measured move, all-time highs, anything out here that I need to know. And I need to write one sentence, just one sentence about this monthly or the quarterly or the weekly. So I write my sentence and then I move on to the monthly. Anything that I need to know here, moving averages. Are we moving towards a moving average? Like we might hit it? Are we moving away from a moving average? Did we just hit one this week, this month, this day? So I write that down, mark any pivot that I need, like this. If we were going to pass through that pivot today, then I would want to know. That's the 49.32 cog line. I need one sentence from that chart, and then I would go to the weekly and do the same thing again. Mark the levels, talk it through, look at any moving averages that I need to use. I turn them on, look at what I need to look at, turn them back off. So that by the time you get down to a daily, you'll usually have 5 or 6 lines, 3 or 4 sentences, and when you put those sentences together and read them, you've got a pretty good idea of what price is doing. Add in today's pivot points, the floor pivots, and then you've got a really solid idea of what you're expecting price to do. Add in econ, get down into the 65-minute or the 15 or the 30, and you're ready to go. Those levels at that point make so much more sense because they're not just some randomly drawn line. They're a level that you can point back to and say, yeah, that's where we broke out last week and we hit the high of the monthly and we pulled back, and you're right, there's a narrative to it. Carry the narrative. Your notes from yesterday start you today. Your notes from today will start you Monday, and just carry it, carry it, carry it. And it saves you from 9,000 lines all over the chart that you accidentally delete with the swipe of one hand and have to start all over again, which is really frustrating. I can try. Let's do it. So before this econ event, we were doing the morning briefing. And in the morning briefing, we had at least this much data, right? We'll even back it up a little more. So what do we do with this? We've got our Globex low, and our Globex high so we can plot out our levels. I'm going to turn that 100 off and just leave it off so that we can flip things in both directions. This way it gives us 0 on each end. The 50 just is the 50 there twice, and we can read the levels really clear. So just turn the 1 off, right? So just by doing that, we've got a pretty good idea of what's going on. It also gives you your Globex high by the time you get into the open, so that's helpful. Every little bit, right? So you can use whatever you got, and it works on any time frame. I know I've been doing these on like the 15-minute and the 5-minute, but price is fractal. Anything that you can do on one time frame, you can do on any other time frame. It may only have weight for that very small amount of time that you're analyzing, but that's all you need. Here's the craziest thing, though. I was watching some TD Ameritrade stuff where they talk about the Cahold pattern and some of those videos, and they are on their daily chart zoomed in like this. Now these are CMT certified analysts, you know, so I'm not saying that they're professional traders, but when it comes to analysis, they've got a piece of paper that says they know what they're doing. And they're sitting there looking at a chart like this. And I'm thinking, shouldn't you zoom out a little bit? I mean, can't really see very much. But their whole purpose in that video, they're focused on what's this day doing and what's it going to do and what do we have to work with. And that makes sense. I don't need 2 years of price action if I'm focused on today's candles. Was there something from 2 years ago that might be important? Sure. But at some point, you got to zoom in because this is the relevant part, especially if you're day trading or even short-term trading. So like I do in my morning briefings, I go out to the daily and I mark that previous day's candle. So we got an idea of the breakout. But I also focus on the closest range. And even this is just a little bit of a range, right? What do we got? A trend? And then we pulled back in that trend, and now we're continuing along with a breakout. So we can measure the entire zone. I guess I should use the other one that has the 100 on it, since I turned the 100 off. We can measure the whole zone and plot breakout levels. We can measure yesterday's range and plot breakout levels. And we can measure the entire trend and plot breakout levels. So if we use this higher time frame analysis, we don't really need these 3s and 4s. Maybe I spoke too soon. We'll use 1.5. Okay, we'll keep that one. We've got our 100, the warning center, and the 1, 2, 3, 6. Bring that down into the 65-minute. I was about to measure it, but we don't need to. If I measure this, it wouldn't be any better than measuring that. So I don't need to. I was about to do it, but no change, right? No difference. It might move this 1, 2, 3, 6 just a little bit higher, but that or that is about the same. Not much better. The idea is that by the time you get down to the smaller time frame, you've already got a lot of understanding about how we got to where we are and what we expect next. So that your narrative is, wow, Tesla calls to February 16, 2024, the one the 217 and a half strike for Tesla? Hold on. Yeah, that's what I thought. We're at 188. Sell to open 3,100 at 40 cents a piece. That's not bad. They make a lot of money on that one. 129,000 in premium. So the idea is that when price gets down to a particular level or up to a specific zone, that you've already got an idea. You can see it in our chat all the time. We don't just say, I think it's going to, 49.30, whatever. It's, this is a key level because it's options, it's the ADR, it's this, it's that. I think we're going to hold here. I think that's the target. I think we're going here. There's something behind it than just, here's a line. And if you add that to your trading or even just to your analysis, it will help a lot. I'm going to say that a different way. Before you even try to trade any of these lines, try doing analysis with the lines. I think you'll really appreciate it because it will make you a better trader. I firmly believe that. If you put the lines on your chart and rather than trying to trade it, you look at the lines and you just do analysis. Now, you don't have to write a book. I mean, honestly, who's got time, right? But you can jot out a couple of quick things. You could just take a picture and draw on it. I think it's going to go here, right? But if you do that analysis and watch how price unfolds and see if your analysis is correct, I think you'll learn way more than trying to quote, well, I'm going to paper trade it and learn from it. Yeah, okay, you'll get a little bit out of it doing that, a little bit the first or second time. But the analysis and then letting it play out, I think you get more out of that. I have not had time. That is definitely true. I've been trying to work on a book for a couple of years now, and it's still not done. I have a lot more respect for authors now. It's just depressing. And the reason I mentioned the analysis side is we talk about the MDP all the time, the missed daily pivot like we had back here. We did not hit this pivot. This is an MDP. I'd never trade an MDP. Never. I don't even like the strategy. But I love the concept and I use it in analysis all the time. I always ask the question, did we have an MDP yesterday? Because if we did, it changes today's analysis. So I just want to know. The pivot points that you highlight, yesterday's high, low, close, today's open, weekly high, low, close, all of those, they're not just a line in the sand that we might trade against if price gets there. They mean something. Just like a VWAP. And I think we can wrap up a VWAP. Jeremy, you used to be really big on the Boulevard. Do you still do any of the Boulevard stuff? You sure? I paraphrased really fast. You were really big on the multiple time frame VWAPs. It wasn't the Boulevard. I just said Boulevard because they're the most famous for the time frame, the zones.
Yeah, I wasn't on the Boulevard, so I think that was Alex or what was the other kid's name?
What zones were
Damn it.
you using? I thought you were doing VWAP zones.
So I wasn't using VWAP zones either. I was using just basic Bollinger Bands.
So these
Yeah,
where
no.
was these? I've got
I know
J
Stone was using VWAP.
JMF trigger candles, JMF deviation channels,
Oh,
PD
James.
James. Ah,
Yeah, that dude. Now I
yeah.
remember.
My bad.
All good.
Yeah.
I've been called worse.
Somebody called me you this morning. I was like, "Oh, that's so cool."
Okay, you've been called worse too.
I must look younger.
Maybe. Oh man, I've aged a lot this year. It's been a stressful year. Well, last year. I keep forgetting it's a new year now. I can move on from that stuff.
I have not made that mistake a lot this year. I've been firmly rooted in 2024. Unfortunately, it's like a weight around my neck for some reason.
Well, I've been able to remember writing down the correct dates. That's worked out. But just last year, I just had too many irons in the fire, too many things going on, and throw in some family stuff, and it's all just complete chaos.
The reason I asked about those bands is I'm going to wrap today up with them. The anchored VWAP, right? The different anchors that we can use.
Ah, yeah. I'm aware of
I
them. I just don't use them.
well, I don't trade with them, but for analysis, when I start my day, one of the first things I ask is, are we above the weekly pivot, the weekly VWAP, or below? And the pivot. There's one of each. I look at both.
I mean, I can usually guesstimate where it is just based on all the uh, all the liquidity zones. I can kind of find a median between them, and it's usually pretty much accurate with it. It almost mimics anchored VWAP. But I mean, the definition of volume weighted price is gonna find that zone anyway.
For me, it's like like I did with the briefing, and I will mention to people, okay, you've got your generic out of the box. Where are we at? And just like looking outside and asking if it's raining or not, you can just look out the window and see if it's raining, and it changes your outlook for the day. It doesn't necessarily mean you're going to go out and go mudding just because you've seen it's raining, but you're going to change some of your plans for the day, or maybe at least reconsider them. When we're above or below the weekly pivot, the daily pivot, the weekly VWAP, then you should start your day with a different perspective.
Yeah, good point. I mean, momentum's gonna take it one way or the other, or magnet.
And how far away from those levels, too, also comes into play. There's the overextension idea, the reversion back to the mean concept, right? We all use a different mean. I see a lot of professionals use that 10 week, the swing trade guys, the bigger firms too. They're using that really large time frame. But for the intraday trader, what's your mean? What are you using on a 5 second chart?
Um, I've been using just the 8 and the 20. I don't really use much more than that. Other than the 200. I mean, I kind of run that too, but
Your band has a mean though, doesn't it?
yeah.
The
So if it's just Bollinger Bands, it's automatically just a 20.
What about your channel? Don't you use like a regression channel?
Oh yeah, SDC. Okay, that just uses linear regression.
Yeah,
So
yeah. So that's
so
got a mean
essentially,
in it, right?
yep, it's gonna run whatever my look back is. It basically will split that in half for the linear regression and in the average. So then, like, if I just add standard deviations in intervals of zero point 0.5, I can pretty much nail either side of that. And I guess if I use that on a daily, I would have to change the look back to go with, what would it be? 20, probably 20 on a daily. It would look back for the full month. And then I could split it that way if we're in a trend.
That fits. Kind of that. It's that same logic. Yeah. The reversion
But
back to the mean has to be something that traders want to approach, first thing in the morning or whenever they get around to trading. First time they come to sit down at the computer ready to trade today, they got to ask how far away from the mean are we, whatever mean they're using.
right, and you can do that with liquidity zones. You can do that with a standard deviation channel. You can do that with the difference of daily versus like 30-minute Bollinger Bands. You can split the difference between the two, and where they intersect is the mean. It's kind of there is an indicator that does that. I can't remember what it is, but it's like it slips Bollinger Bands inside a Bollinger Band, so it'll do the split for double the time that you're looking at and the time that you're looking at. Like if you're looking at a 5 minute, it would throw a 10 minute over a 5 minute. If you're looking at a 30 minute, it would throw a 1 hour over a 30 minute, and so on. And it will give you kind of a split in the mean to where you could see which side of the mean you're on currently. It's weird, but it works with Bollinger Bands too. I was playing with that in TradingView. I can't remember what it was called. It was like a dual Bollinger Band or something like that. They called it something simple, and it was really something stupid, but it worked.
When I first got into TrendSpider, I was so excited about that multiple time frame to where we could see like the hourly Bollinger on, a 15-minute chart, that kind of thing.
Right.
Oh, I absolutely loved it. And I started coding it into Thinkorswim tools. Every chance I got, every indicator that I knew I could do it to, I was coding, and I always called it just the TrendSpider version of Bollinger or whatever. And I have in the Thinkorswim workbook quite a number of those TrendSpider tools. Bollinger Bands, acceleration bands, VWAPs. Well, not VWAP because VWAP's always the same. Moving
Right.
averages, and I had a ton of them. And for a while, I used them a lot for analysis. But it just got to the point where I found myself going to that time frame anyways. And so I was like, well, if I'm going to be on the 30-minute anyways, I might as well just look at the 30-minute. So I quit doing it. But there's a lot of swing trade logic that uses like a weekly Bollinger, daily Bollinger, and then you have those levels on your smaller time frame and you trade off of them.
And I've been trying to figure out how to code SDC into TrendSpider in their AI assisted um, coding platform. I haven't had any luck with it yet. I haven't had time to do it for a couple weeks
I
anyway.
was
But
gonna say you're touching on something that is like, we I'm married. I have a wife that reminds me, whether I like it or not, of things that I haven't done yet. Like cleaning
right,
the gutters.
yep,
I've got this nagging thing and voice in my head that says you still need to go to TrendSpider and code all this stuff. And I have not yet gone to TrendSpider and coded all this stuff, but I want to.
there's a lot I want to do with it, and it's like I went so far as to ask their admins for a little help on it, and they're like, "Yeah, we'll give that a shot. If it seems valuable, we'll do it for free." I'm like, well, "Okay." It's been a few weeks and they haven't gotten back to me, so I'm assuming they dropped that ball.
Yeah,
But if I
I
could get SDC to work in TrendSpider, I could lay it over some stuff and be like, "Aha! I know there's some epiphanies there because I can build a trading bot that would work with it."
I built a scan in there the other day for weekly gap up. No, it was um, it's a weekly candle expansion bar. So a weekly bullish engulfing. There's my scan right there, and that has a fantastic follow through. SMCI puts 545 at 537 strike. That SMCI has just been a record setter this year. It's like the newest. It's a mini Nvidia.
Nice.
So I coded this. This scan is for that weekly bullish engulfing, and the same names are on there except Coke is now added to the list. Nice, Coke. We'll check that one out. So this is a great strategy.
Ooh, what a close.
When you get a bullish engulfing on a weekly, preferably with a red to green or a something like a Marbozu, a Cahold, some other one candle, two candle bar pattern that can go with it. These are really bullish signals. They have a nice follow through rate. They're good for swing trades. And right now, I'm finding a lot of them on value names like Coke. That monthly looks really strong. That's been running great. I just don't like all that sell resistance.
Right.
Yeah, that makes
Yeah, I
me a
was
little
looking at
nervous.
Coke yesterday and I was like, I wonder if it's going to pull back and give me a long opportunity again.
This white line on my trend spider, that's the mean. And it's really odd. Um, I don't even use it yet because I came across it and I was like, that is so weird. I'm going to look at that for a while. And I've continued to look at it and I don't trust it. I'll give you the name of it so you could take a look at it. It's I guess that's what it's called, linear regression line. It's the mean.
Wonder what the look back is on it. I think
I
I
got
see
it
it
set to
there.
14 right now, but it gives you a chance to set it to whatever you want.
Right. Okay.
And normally, if you know how it is, you put a linear regression, you normally get like a channel.
Right.
I put this one on and it was just the mean. And I thought, okay, I'm gonna look at that for a while. And I was really impressed with just how adaptive, self-adaptive. It does a really good job. So I'm watching it. I don't trust it. I don't want to trade with it yet. I'm just trying to get used to some of their tools.
There are a few other tools built on linear regression besides the SDC. I think, if I remember right, the Boulevard uses um, part of that formula to find the mean, so that you can find where your divergence is, or where the width of the bands are, or something like that. I can't remember how that exactly worked, but James explained it one time, and it was just like I glassed over because I'm like I didn't care. Yeah,
Yeah,
but
just tell me I can use it or how to use it.
right.
So,
I figure if they
yeah,
have a linear regression channel tool already built into TrendSpider, I can use that as a base to code SDC to it, because then it's just simple standard deviations.
the Bollinger, that's not the right one. We need the VWAP.
All right, I'm gonna be on a mission to play with TrendSpider now.
Oh, I wish I could get the motivation to go code some TrendSpider. They spent so much effort on this trying to get it to self anchor. I mean, it's impressive that they did all that work, but I continue to look at it and I just like struggle to find, just like you said, your eyes just glaze over because like you guys went through all that effort to get it to self anchor, and I'm the guy that's going to want it to anchor at a specific spot and will override whatever junk they put in there that made it anchor on its own.
Wonder. Um,
Someone gave me an indicator the other day that was in a watch list column, and at first I thought, oh, that's mine. You're just giving me one of my own indicators. But then I looked at it a little bit, and it was not one of mine. It was actually pretty smart. They were using that self-adaptive moving average. Have you seen one of those?
oh,
Okay, so the smart moving averages, you don't give it a 50 or a 10 or an 8. It reads the volatility and then it adjusts to the right size moving average that it thinks you need right now. Self-adapting moving averages. So it used that, and then it also used, um, those indicators on Thinkorswim that use color, like shades of color, the Sawami series, I
Yeah.
I can't read those. I'm not colorblind, but I honestly can't read those. And if I could, I just think I could get so much more out of it. Well, what this indicator does is it reads those. And man, I've said it a million times. If you can't do something, let the machine do it, right? I mean that's the whole point of having a machine.
Right.
So somebody coded this indicator to tell Thinkorswim read the Sawami map, and then set it to a self-adapting moving average and give me trend strength and breakout bars.
Huh.
And I'm like, I'm gonna dig into that. And then of course I didn't because I've been busy. But I just stuck it into a code right here. And so we could find it again later. It's using that thermo look back bars set to a 50. It's got the adaptive moving averages set to standard, and then from there on out. Now in the watch list column, it really just turns like green or red. Yeah, like that. So we're going to have to turn that off.
Ugh.
Yeah,
It's blinding.
we'll turn that off right away. We don't need this thing giving us color adjustments like that.
I love that it lets you change the colors in TOS.
Yeah, I built one of these for a client. He said, he says, well, I'm at work and I can see my computer from a distance, but it's too far away to read the indicators. And I built one that changed the entire background of his screen just like that if we broke out.
Nice.
Yeah, he was like, dude, I always know when we're breaking out now because my whole screen goes red or green. I'm like, cool.
Awesome.
Yeah. And then he has to go turn it off because it's ugly as hell. I can't read it. So this has that little label up there that says strong up. Of course, all the labels are bad colors and just needs to be adjusted. But this is using the smart tools like a self-adaptive moving average and the Sawami colored series indicators to read what's going on in price. And I thought, well, heck, we got to code that into a normal indicator instead of just a watch list. And I didn't know what else it has, but it has a trailing stop in it. It has your target profits, so first trade, second trade, trailing stop, long trade, short trade, buy signals based on crossovers, whether it's breaking above or breaking below. Pretty smart
That's pretty
stuff.
sweet.
Yeah. So this was on my list of things to dig through this weekend to see if we can get something out of it.
I was gonna set up like an AI, or not AI, but I was gonna use AI to build a scalp bot that would work with the SDC channel in TrendSpider. So
Nice.
like anytime it crossed above linear regression and more than 0.25 standard deviation above, it would break, and it would target with a trailing stop 0.5, 0.75, 1.0, 1.25. It would just keep a 0.25 trailing stop on the entry. And I went to try and write the code for it, and I never got past the building of the SDC channel. So I posted a screenshot of it in the chat. I don't know if it shows up when you do a search on TrendSpider, but if you want to mess with the code, it's there. It just needs to be tweaked to work with TrendSpider. But it's written in what you would call it? What is it? Not Adobe. Dang it, brain fart.
PineScript?
Java,
Java.
the worst. Yeah. Well, the thing is, I don't know how to build the library for Java to work right with a different platform. So I got to find the information for it to digest and then give it the code to work with it. So yeah, if you just start typing in linear, it should pop up. It should be linear regression with standard deviation. There's the R squared one. Maybe it didn't publish mine yet.
Yeah, I'm not seeing it.
Nope. Yeah, it's not there.
Not yet.
Arr. I'm trying.
Mine are going to be so much more basic. Mine's like yesterday's high, yesterday's low, basic pivot points. Because I know it sounds really generic, but I mean that's I make money on it. It's not generic to me. It's food.
Does
And
the
with their
job.
alerts and everything, they're have you used their bots that will call the Discord and post into Discord for you?
From TrendSpider?
Yeah.
No, I haven't done that one yet.
Oh, they're fantastic. You don't have to know the language to get it to go to your Discord. You just have to tell it what your Discord channel is and give it the permissions, and it'll post into your Discord for you. Like I've got the bot for the spy, uh, the buy position for spy. Every time this gives a buy signal for spy, it posts in my Discord and tells me we have the buy position. I love it. I mean, it's fantastic, and you don't need to know how to code for getting this to talk to Discord.
It just up and does it.
It just does it for you. Yeah, TrendSpider's got so much really cool stuff. It really does. And this is a bot. It's a trading bot. Every time my signal happens, it calls me and says, "Oh, hey, spy, buy alert." Oh, thank you. That's what it's supposed to
Nice.
be. Yeah, nice and easy.
That's what I want. I just want it to tell me when my signals pop up, and I can go and say, "Hey, I want to see that on," and I can use it to scan. I could throw the Mag 7 in there, or I could throw whatever I want in a watch list and have it watch the watch list with that signal and pop it up. That'd be great.
There's just so much stuff. Let's see if I
I got a
can.
lot of homework, and I got to learn to write Java better. I'm just like so very basically brand new at it. It's not even funny. And I used to be able to write stuff in Forth
Well, you're way
way
beyond
back in the
me.
way back in the days of Commodore 64. I used to be able to understand and write Forth.
Trying
That
to
was
remember
a
which block, which I don't remember which Discord I have it set to. Yeah, because it's not. I don't trade because some machine told me.
yeah. I don't usually either, but I mean, if it's my own signals and my own stuff that I built, cool. I can live with that.
Options BB, which is a Discord bot, it has really good alerts, and those I just use those as price levels. Like price broke above X amount, let me know. I love those. I use that on the Discord all the time.
One of these days, I got to get it together and get up to speed on this stuff because there's a lot of useful stuff out there. I just am not utilizing that I should be.
It's all time saving, you know. Like if I have to go crawling through a bunch of charts and everything, then I don't have time to do other stuff that I could have been doing. And that I get hung up on that a lot. You know, like well, I could have been doing something else, but I ended up doing this because of whatever reason. And like, man, I could save so much time.
That's the way I'm going. Although, my phone's like blowing up, so I'm in and out. But they literally just did the launch of Quasar today, so I'm kind of seeing how that rolls. So far, the platform needs a little more work. Should have probably waited to launch, but it's at a point where it can at least start getting the following.
That was today.
Yeah. Weird. I go to pop out my Discord um, live stream, and it doesn't pop it out anymore. It stays in the same window and turns gray. I might need a Discord update.
So this is what the alert looks like. If you go to build it, you have to have a webhook. I'm only going through this real quick because I tell people all the time to make a Discord and then use that Discord to do your trade entries, your journal work, all of that. So if you're running your own Discord, you got yourself a private little Discord, whatever. You need a webhook to run those bots. So we'll just go to bots here, and I will choose, I don't know, screeners. So if I need to use that TrendSpider and I want to have a webhook, I can right click on screeners, go to edit channel, and come down to uh, integrations. Here, create a
Ah,
webhook. It's really simple. You give it a name,
nice. I didn't
and
know that
that's
worked.
the channel, and then just hit save changes and copy that webhook. So now you've got a webhook, and it's really just that simple. If I connect this back to TrendSpider, when it has an alert, it's going to post into here because I gave it the webhook. So now I can come back over here and it says, what's the entry webhook? So when it tells me to get in, that'll be the entry. And when it tells me to get out, that would be the exit. Two different messages. You can have it go to different channels or you can have it go to the same channel. So I can just post that in here. And now
Well, that's
what's the
thinking cool.
message, right? What do I want it to say? And hit save. From
You know
that
what you got
point
to do
in,
now?
yep, from that point on, this bot will send that message to that Discord, to that channel. If
Y-
you're running your own private Discord, you probably don't have roles and all that, and you're fine. But if you've set up roles, you got to make sure that the bot has permission to post in that channel, and then you're good. So
Right.
probably want to run a little test. I I thought they had a spot where you could run a test. Maybe that was on a different place, but just like that, and you can tell it how many messages you want. Should it, bother the heck out of you, or just do it once and then leave you alone? I don't want to change that, so I'm leaving it alone.
Yeah, you're gonna have to make a video that goes through all of that.
I I use
And then
those
I just gotta
webhooks
figure out
a lot. Yeah.
how to plug that into TrendSpider from that end.
Another really good place for webhooks is called Disco Hook. This is free, and you can save your work if you're working on something, or if you're going to post something that has a consistent theme to it a lot. You can get it all filled out once and then save it, and then just keep bringing back and edit small pieces and do it again and again. But you'll post that webhook in the top, right up there. And if it knows, or if it's legit, it'll change like it just here. You can give it emojis, icons, you can do Discord channels, create its own bot titles. I mean, this thing can do whatever you want, and it can look really snazzy. So if you're creating something that you want to save and that you want it to look really sharp, that's a nice way to go. Makes
No
it look
kidding.
pretty. I'll bring up one to kind of show you guys what it looks like. This was done with a bot using that disco hook. So, it puts it into a nice little package, a category. Not that. There we go. Something like these. All these posts are done with that.
You know what I could do with that? And I'll have to run through this process again with you at some point, unless you want to help me build it. I have a list of RSS feeds, and if I could connect them into a bot, it would just be like a little squawk. It would give you the news headlines and pop them up exactly like that, stuff that's relevant as it happens.
For that, um, I've got that Twitter alert service, the Twitter package. And in this
Okay.
Twitter package, it grabs people's tweets and then posts them right into the chat. Well, it will also do RSS feeds. Um,
Sweet.
yeah, I built this for people to use because I hate Twitter. I don't want to go to Twitter and hang out. So I
Yeah, me
grabbed
neither.
a couple of fund managers that I know are really good that do like macro work, and I put them in here, like Mott Capital. He's a fund manager, has his own Bloomberg machine. He's always like a perma bear, but he will research, the job numbers for an example, or, things like that. And so I like his insight. A couple of UOA traders, Whale Stream, Unusual Whales, Black Box Stocks, those kind of guys. It takes their tweets and just sticks them in here so that from one spot you can set alerts. You never have to go to Twitter. And the the back end of this is the same thing that you would want to use for an RSS feed.
Exactly. Sweet.
So
So how do I plug that all in?
you want to go to me6, MEE6 dot XYZ. How's that for a web page?
No kidding.
So the XYZ Me6 brings you to this. I have an account, so I can do some pretty fancy stuff. The Bullish Bears has an account too, and if you're going to bring it here, just ask for permission. They don't have to give you their keys or their code or their passwords. It'll actually, in the Discord, they give you permission to like change channels, user permission rules. If they
Right.
change your permission here in the Discord, you'll be able to access the Bullish Bears Me6 app and go in and use the RSS feeds. So if I go in here
Oh,
and I
sweet.
just pick a server, I don't have permission on that level for the Bullish Bears, but we'll pick one, say like my Thinkorswim workbook. Each one of the Discords has a subscription, and if not, then you can only do limited things. But on my Thinkorswim workbook, it's got all of these things, and I can go down to the social side, and there's the RSS feeds.
Sweet.
Yeah, it's really nice. Instagram, kick alerts. I mean, this thing is up to date. It's got its own AI. If you want people to have AI in the Discord, I can turn it on, and all I got to do is pay for it, and they could ask James right there in the Discord. Jeeves, whoever the butler
Yeah,
is.
Jeeves.
Yeah, Jeeves. Alfred.
Yeah. I haven't heard of Jeeves in forever.
I'm old, I know. Thanks for the reminder.
Man, I remember the commercials for that one. Holy crap. I just had a flashback. I'm sorry, man. Reminiscing.
Yeah. So they're not very expensive. I carry a couple of subscriptions for like the Twitter bot. That's a yearly thing. I've got a lifetime one for the Discord for Thinkorswim. So some of them are like $20 a year. Others can be $20 a month, depending on how pimped out you want to get with it.
Yeah, I could just. I know Bullish Bears probably has a Me6, so I could
They
just
do. Yep. They do have the
go in and.
Me6. All you got to do is get the permission in our own Discord. If you have admin rights or whatever they call it, then you've got permissions to use that. All you got to do is go to the website and log in, and you've got it.
Sweet. And I just got to pin it to a channel.
Yeah.
Very
And
cool.
we don't have a channel with webhooks. So I asked once and I kind of got like a echo. So I didn't push it. Like, okay, never mind.
Well, it might be one that Lucian would have to relay to the the uh, the web guy he has in the background. What's his name?
So here on the Discord, if you go to say the questions tab and go, I don't have edit, so I can't make a webhook,
Right.
and that shut me down right there. Like, okay, I guess no webhook.
See, I'm not sure if I have that or not.
Just to stop the stream